There's a massive shift happening in AI infrastructure, and it's creating a fascinating clash between two very different types of companies. On one side, you have Bitcoin miners like IREN, or IREN, and on the other, you have the quiet enablers like Astera Labs, ticker ALAB. Everyone's piling into Bitcoin miners, betting they'll transform into these massive AI data centers. But while they're spending billions on concrete and cables, companies like Astera Labs are already cashing in by selling the critical plumbing that goes inside those very same data centers. Think of it this way. IREN is trying to become the landlord. They're building the giant apartment buildings, which requires a ton of upfront cash and carries huge risk. Astera Labs, meanwhile, is the toll booth. Every single AI server that drives into those buildings has to pay them a fee. It's a completely different business model. Let's break down these two opposing bets. First, we have the moonshot, IREN. IREN is making the most aggressive pivot from Bitcoin mining to what they call AI cloud. They've put out a truly insane number. Management is guiding for $3.4 billion in annual recurring revenue by the end of 2026. Let us put that in perspective. Their recent quarterly revenue was around $185 million. To hit that $3.4 billion target, they need flawless, lightning-fast execution over the next couple of years. So what's their strategy? They aren't just building the empty data center shell. They've secured $3.6 billion in financing to buy the NVIDIA GPUs themselves. They don't want to be the landlord renting out space. They want to be the cloud provider, competing directly with Amazon AWS and Microsoft Azure. This is a high-stakes, high-reward play. If they pull this off, the stock could be a 10-bagger, easily. But if they miss, they're left holding the bag with billions of dollars in rapidly depreciating GPUs. It's the definition of a hero or zero investment. Now, let's look at the other side of the coin, the quality king, Astera Labs. A lab is the arms dealer in this AI war. They don't care who wins. They sell to everyone. Their business is making the specialized connectivity chips, things like retimers and switches, that allow all those powerful NVIDIA GPUs to talk to each other inside a server rack. You literally cannot build a modern AI server with Blackwell or Rubin GPUs without their technology. They are essential. The financials tell a powerful story. Revenue recently grew about 104% year over year, hitting around $230 million per quarter. And get this, their gross margins are between 75% and 80%. Compare that to the razor-thin margins of a Bitcoin miner. This is a high-quality, high-growth, profitable business. The beauty of Astera is that it doesn't matter if Google, Microsoft, Meta, or even IREN wins the AI cloud war. They all have to buy Astera's chips to build their infrastructure. It's the much safer way to get exposure to explosive AI growth without the wild volatility of crypto prices or the execution risk of building a cloud empire from scratch. So, how do you choose? It really comes down to your risk tolerance. If you want to gamble on a potential 10 times return, IREN is your ticket. That $3.4 billion revenue target is the lure. But you have to be comfortable with the very real possibility that it could go to zero if they can't execute. It's a binary outcome. On the other hand, if you want to invest in the near certainty of AI infrastructure growth, without sweating the price of Bitcoin or the outcome of the cloud wars, Astera Labs is the high-quality compounder. They're growing at an incredible rate, they're already profitable, and they are the essential toll booth on the AI superhighway. Two different paths, two completely different bets on the future of AI. Thanks for watching. What do you think is the smarter play? Let me know in the comments below. And don't forget to like and subscribe for more deep dives into the world of tech investing. See you next time.